Hey, how's everyone doing? This is Vic from Forex Academy Group, and today I wanted to go over real quick on basically the Traders Dynamic Index. Okay, there's quite a few people out there that use a TDI. There's many different ways of how to use a TDI, but a lot of people don't know how to use it. Okay, there is many different ways of how to use this indicator. It is literally one of my favorite indicators, and I use it on the daily basis, guys. I use it whether it's on the 1 hour, the 4 hour, or the daily time frame. Of course, the higher the time frame you use it, the more accurate the signal. Okay. So we're gonna go ahead and cover the 1 hour time frame. And as you can see, this is the euro and the US dollar major currency pair. Well, a lot of people trade this currency, so might as well just go ahead and use it. All right. Um, I use it also with our custom settings. We have our own numbers that we use it for, and therefore, um, it that's why you see it says Forex Academy Group. So our own settings are attached already. You don't have to do anything with this indicator. Now, with that being said, normally what I look for, right? Just for example, the green line referring to the RSI line, all right? The red line is a signal line, right? Normally when you look at these two lines in conjunction, a lot of people look for it just like a regular RSI looks very similar to the stochastic as well. People normally use it just to see if the market is currently on the oversold or overbought section. All right, normally looking for that crossover of the red line and the green line, and then people will get their signals that way. However, there's more to this indicator than just a crossover of the yellow and the correction of the green and the signal line. Okay, you also have the yellow line, which is the baseline. Okay, now the norm for the baseline is to stay right at the 50. Okay, but we know that the market does not move. I mean, it moves sideways, but we know that the market does its waves, right? Creates higher highs, higher lows, or lower lows, lower highs, whichever the case may be. Okay. So normally the sentiment, right? The market sentiment, the baseline will normally try to make its way back to the 50, and that's where you get your major waves from, right here, right? Normally, this type of movement right here, it's really good, um, because of the simple fact that all you have to do is just wait for, like other people when they trade the RSI, right? They wait for that oversold or overbought section, which is the numbers on the right, 70 and the 30 line, and then they'll go out and they'll try to buy the market or look for a trading opportunity, a good entry. Whatever your entry strategy is, that is completely up to you. But the Traders Dynamic Index gives you really good indications as far as, hey, you might want to take a look at me because something's about to happen, right? So one of the things like I said, I normally do is you also have the volatility bands, also known as the Bollinger Bands, attached to this indicator. Now, this is really good. For those people who are normally, they tend to be that visual. They need to see like pressure accumulation in the market and stuff like that. These volatility bands, right? They're very good when it comes to letting you know, hey, something's about to happen, right? Like I said, some people call them Bollinger Bands, but realistically speaking, I mean they're not. They have their own name, volatility bands. Okay. Now, one thing that you can do, and this is I used to do this. A lot of people do it actually. Also, those beginner traders, they add the Bollinger Bands too as well to the main charts. Okay. Now, don't get these confused, guys. Just because you have, let's say, squeezes, right? Normally, when the volatility bands come together, they compress. That means that the pressure is building up. Okay, and once the volatility bands start spreading away from each other, just like they did here, right? They start kind of to create this bubble, right? right when you start that the TDI is starting to open up, volatility's bands are spreading, open, forming up a bubble, and then you see the RSI and the signal line pretty much riding that bottom volatility bands. That is a good indication of a sell signal. Okay, now remember, what entry strategy do you have? You can also incorporate that to the TDI. Okay, for example, like I said, and I just put the Bollinger Bands just so you guys can get that visual effect, because Bollinger Bands work very similar, right? There's pressure in the market, and then all of a sudden you see that bubble create in the market. And as soon as you start seeing these lines come together, then that means, hey, that volatility already kind of went away. Pressure starts building up once again. Okay, so this, like, once again, this is a 1 hour time frame. We're gonna go ahead and I'm gonna go ahead and remove the Bollinger Bands, and we're just gonna go ahead and focus completely on the TDI. Okay, so once again, I look at this market here, okay, and not that great of a squeeze right here. But if we go back, let's say this situation right here, right, we get a very nice squeeze. Um, Now the RSI and the signal line didn't actually indicate a TDI flush. This is what I call a TDI flush. Basically, the RSI, the signal line, and the baseline, they are literally flush with each other. So therefore, once the market breaks up, forms a bubble, the market starts going down. Okay. Um, Now keep in mind, the the more separation between the RSI and the signal line, that means the stronger the trend. Okay, so what happens in this situation? Let's say we entered the market. Let's say you see this coming up, right? And you start looking at the market and be like, okay, something's happening. So what can I do? Okay, so obviously the market started going up. Okay, I'm going to go ahead and place my trend line right there. Now, for those not that, obviously we already know what happened to the right, but those who actually don't know, I normally keep a very close eye in situations like this, because that doesn't necessarily mean that the market will come up and hit this resistance area right here. Okay, so what happens is the market, yep, goes up, right, and then all of a sudden you get a breakout. If you look at the TDI, there goes the crossover of the signal and the RSI line. Okay, so at that point you get into the market. I like to use the trend line breakout strategy. Okay, and as you can see, we get a breakout, and then all of a sudden, well, you enter the trade, right? You put your stop loss right above this high right here, 117,461. And then normally, guys, what I do when it comes to my targets, and you will notice this on most of your, at least a good 80% of your trend lines, when you if you do trade the trend line breakouts, you'll notice that the market will normally come to this area right here, to the beginning of your actual trend line. Okay, so if we go back, look at the market hit that target. Okay, so at this point you were risking 28 pips, and you could have made 100 pips. Okay, the last number doesn't count, it's a sub pip. So I don't know about you, but that honestly is a 5 to 1 reward to risk ratio, guys. I can do that all day, every day. That is actually smart trading. Okay, but yet again, like I said, this is the 1 hour time frame. Let's go to, let's say, for example, one of our other currency pairs, GBP USD, right? There we go. All right, and now let's try to find something on the 4 hour time frame. All right, we go back, look at this nice squeeze right here. Once again, trend line. Right now, guys, here in Forex Academy group, there is a reason why I use two types of trend lines. If you want to go ahead and learn all about my strategies and etc. You can go ahead and join us at our group. I'll send you guys a link. I'll put it on the bottom of the video for you guys to send me a message or whatever the case may be. All right. But like I said, guys, here we go. Once again, same scenario, right? You gotta wait. You gotta wait for the market to go ahead and break that trend line. Okay. So now this is the candlestick, right? Well, what I normally do is we're on the 4 hour. Because we're on the 4 hour, we're going to take this down to the 1 hour. Okay, remember, you want to get a better entry. Okay, there we have it. Look at the actual breakout right there. Your high, your stop loss will actually be that very candle because that was a high that formed. So 143166. Your entry is down here at 142907 at the beginning of your trend line, right? Remember, you only go to the 1 hour for your entries. Go back to your 4 hour for your target. Right here. And let's see, guys. You risked 31 pips. At the end of the day, you made 296 pips. Guys, I can do this all day, every day. The TDI is an awesome tool. It's an amazing indicator. It's just there are many different ways of how to trade this indicator and make a lot of money. However, you still need to follow the proper risk to reward management. Okay, that's on all your trades. That does not necessarily mean because you trade the TDI. That is just one common rule when it comes to trading. All right. Like I said, you can use the Bollinger Bands on your main charts. You can even use this on the daily time frame, guys. Let's see. Let's go to, let's say, EuroCAD. Let's see if EuroCAD, and we're gonna go ahead and we're gonna go to the daily. Okay, daily time frame. Oh, let me go ahead and erase this. Okay. So we have a squeeze right here, guys. Have a squeeze right here. Okay. So with that, I'm gonna go ahead and go down to the 4 hour time frame. See if we can get a trend line plotted there. Okay. In all reality, when I look at this, not really. However, what I want you to keep in mind is look at this. Look at that consolidation. Okay. So not just because there is a trend line doesn't necessarily mean you can't trade it, but you are in a consolidation zone. All right. Once at this point the market comes down here, let me go ahead and change the settings on this real quick. But once the market breaks out, right, like it did here, and come here, retests, that's what it does. That's what it did. It retests that structure, right? Then the market came and went down. Okay, that is a breakout, consolidation breakout. So at this point, you get in the market down here, which is right there. Okay, now your stop loss is going to be the previous high, which I would have placed a trade right there. Okay, and so at this point, you're risking 129 pips. So be careful with that lot size. So to make 288 pips. All right, guys. As you can see, you can do this on any single time frame, 1 hour, 4 hour, or the daily. All right. So guys, this is a Trader's Dynamic Index. This is just one of the many different ways of how I use it on my daily trading. Okay, if you want to learn more, don't forget, send me a message. Where once again, I have a Facebook group, Forex Academy group. All right, I will add all the links so you guys can go straight into my group and request to join. But most important, don't forget to like and subscribe this video. And if you want to know more information about how to join Forex Academy group and stuff like that, go ahead and comment below. And if you would like to see other videos just like this one, do the same thing. Go ahead and comment below. And thank you guys for your feedback. Thank you and have a great time.